Hey there. So we're back for another Hive Mind, and my guest today is Goran Bosankić. So have I pronounced it right, Goran?
Yeah. Good enough, good enough.
Close enough, thank you.
Close enough, yeah.
Goran was the CEO of ABC Tech for a number of years and is now part of another organization called Field Nine. And we're going to be using this opportunity to look back at digital banking as a domain, but also looking forward ahead and seeing what's going on in fintech and getting Goran's opinions, all of that. So, Goran, thank you very much for joining me.
Thank you for having me. It's a
Great.
pleasure.
So, just to what I'd like to do for this is like let's break it into a game of two halves. I think if we start by looking at what's going on in fintech, and then we can talk about your leadership and scaling experiences and what you took from that. But if we look at that fintech, we hit a bit of a peak in 2021. There was a bit of a bubble. Everything got a little bit crazy, but fintech was the golden child. What do you think? Like, what's your view of fintech as an industry now? Where are we at?
Well, I think fintech is paying the price, like many other parts of the IT industry overall, of this 2021 that you mentioned, of this whole craze and the incredible demand that was caused partially I mean, in many ways by COVID and the whole demand for digital services, but it kind of overlapped with the rise of the fintech and digital banking and all these services that were so hyped. And basically, I wouldn't say that what is happening now is a decline, but I would like more to call it like an evolution. The real players are the good ones are profiling themselves, the bad ones are dropping out, as the funding goes away, which is another element that contributes to this current situation because there was an abundance of money and investment, and like today AI at that point, if you just put a fintech label on whatever you were doing, you would receive a ton of money. Now this is wearing out, and basically sustainable projects and companies are continuing further, which is okay because as you said, at that time I was part of the company, actually running a company as a CEO, doing core banking, digital banking, so being in the heart of it. And banking is a serious business. So I'm more than 20 years in the industry. When I say industry, I mean, financial technology. So whether in payment or in banking, which I make like two separate verticals because they are overlapping, but they are very different in many ways, which I realized I've been, let's say, privileged to be able to realize this working in both parts. And at that time of that craze, I mean, everyone was doing digital banking or fintech of some sort. And when you say banking, when you apply the banking label to something, it should apply a very complex set of rules and regulations that apply to that, let's say, industry or vertical, call it whatever you like. And that unfortunately was not the case with many of the projects that were happening at that time. It continues even today, but it's getting shaped, it's getting more control over it. I especially realized that because during my tenure, I participated in a project of establishing a digital bank from scratch, so full digital bank, and I was in charge for procuring the potential solution, designing the whole product, and running the team at some point. And at that point, I realized how the bad situation actually is because a company that I was running at that point had a traditional, let's say, traditional banking business, core banking with brick and mortar banks in the EU, doing everything that needs to be done by the bank and being regulated. And then I went out to this world, seeking for agile providers and vendors that can help build, let's say, fintech project, digital bank in a short period of time. And I realized that many of them have been orchestrators of such services. Many of them not having the proper knowledge or the understanding of the banking business at all, or having the technology required for it. And I mean, even not to talk about the regulatory part, which is at the end essential for providing high quality banking services. I mean, we've seen it in the Revolut case until they got their. If you can take them as an example, I mean, they're a different story. Billions of and billions of money being pumped in, but at the end, it didn't help them until they, managed to achieve the necessary regulatory requirements that they needed. Bank on the other hand, that is like a today a dream job. I don't know how to call them. I mean, the most successful digital bank or the bank of new era. They took a completely different approach. They talked to regulators. They adapted. They built the house from ground up and achieved tremendous success. Of course, there are elements, there is market, there is demand, there is, all other elements of that success. But I think, the most important one was that they follow the rules of banking and regulators and regulations, and this is what helped them to achieve that success and to grow and to scale and to have trust of their customers. That they're safe, their money is safe at the end of the day. This is something that, I mean, if you perhaps will touch a little bit like trends like buy now, pay later, etc. I was in one panel on one of the conferences a few years ago with, buy now, pay later at that time was really, really hot topic like 3 years ago. And I never was a huge fan of it. And at that time, I was actually in this previous company. And I said, at the end of the day, those are loans. And loans are the essential product of banks from forever. Like first job of every bank was not safeguarding money, but loaning it to people. And it's highly regulated. Whoever is deep in the industry knows what does it mean to run a loan. It has so many regulations, so many risk assessments, so many reservations, so many responsibilities towards the central bank. And you can do it like without any of this for some time, but it never ends up good because loans are serious business and you need to approach to them like this. And it was the analogy with the buy now, pay later, which didn't respect the rules at that time. As soon as they had to, the model completely changed, which is natural. Same can be applied for this, let's say, digital banking world and what is happening today. Going back to your, initial question, one of the primary reasons why it's reduced, apart from money inflow, sustainability, and those who could obey the rules and regulations are still there on the market. Those who are just riding the hype slowly went away or transition to AI,
Yeah. So
which is the new hype.
you raise a good issue, which is, as an individual, you're always anti-hype. You've got to separate out the hype from the things that are genuinely transforming the industry. And I think there are arguably quite a few examples, troubled examples of fintech where there was lots of excitement and that hasn't necessarily played out. And if I were to just pull on a couple of threads, I mean, embedded finance, we know it's going to be a good opportunity, but it's taking a lot longer to educate the market. You've got open banking where there are ostensibly there's a risk that quite a few of those providers are going to fail because there's not much profit in it. There's a few really and you talked about buy now, pay later, which, as you said, was temporarily circumventing a lot of rules and it is now being kind of yanked back down to reality. So there's been a bit of a hangover towards some of the bits that were previously most shiny. If I were to look at this in a more positive way, okay, we've seen the things that aren't working out. What are the areas that you are genuinely excited or interested about looking ahead?
In terms of fintech in general,
Mm.
any kind of trend touching the fintech or the banking part? What do you mean by?
Either, really. Any technology that you consider that's going to be quite transformative for financial services.
Well, to be honest, I mean, you can hate it or love it, and I know it's everywhere. It's probably in that glass of water that you're drinking right now. But AI is something that we cannot avoid. And we can't look away and say it's not, it's a hype, it's not touching, but it's there, it's growing rapidly and massively. And yes, machine learning LLM models have been used in banking before on some smaller scale, but the progress that came with ChatGPT and Anthropic and other ones, and everybody building wrapper and services around it, and now the agentic trends. I mean, today we have a very good customer support AI agents in banking, which significantly reduced the human power behind it, the accuracy, the speed of providing certain services, and that part will grow. I mean, whether I'm excited about it, I'm just trying to emphasize what I think will happen, what will grow. The positive and negative will be determined by the market acceptance and how the people feel about it. I know for some of them, touch is considered to be essential for some services, but I can tell from a personal experience, this example of this, AI agents, it works perfectly, and I'm super happy with it, because I need to activate the card on my new phone. I call it what you need, I say it, and it's done in 60 seconds. And as the quality of these services will, enhance through time, it becomes seamlessly integrated, is going to play a much bigger and bigger role. There is another negative context to it. The power goes in both ways. So for the positive and for the negative. So the fraud, as we see even today, I actually read this morning, I think, from JP Morgan, the statement about how they are pulling the brake on AI implementation because most of the organizations implementing it do not know how the decisions are being made behind the model. They're just pushing it because it's trendy, meaning they cannot control it. They cannot control the output fully. The security mechanisms are still not in place fully, which shows that in the last 6 months, I think they said like fraud increased threefold or fourfold or something like that, which is just tip of the iceberg. I mean, if you ask me, as the systems are becoming better and better, it's going to increase, and that part is exciting in a negative way. It's scary a bit because AI is very powerful and is going to be definitely the most transformative force in many industries and especially in fintech, because we've been working on digitalization of fintech services for years now. That was always holy grail, from digital onboarding, KYC, digital identity, to all the other aspects of providing financial services. And now you are infusing everything with this super powerful technology that can harvest everything from that digitalization. So it needs to be taken in consideration from the security perspective, definitely, but definitely as exciting from the excitement point of view in terms of what new things it can bring for the end users. Um, yeah.
One of the interesting things about AI, though, and this is handicap that keeps on showing its face in financial services, which is, if you're using an LLM and it's giving advice, that has an immediate regulatory or compliance implication. Like if it's dispensing what is classified as advice, and the second of which is, it might be able to interpret data, but it still relies on a lot of that data being exposed properly. So in legacy banks where they've got data all over the place, the quality of that data, if it's poor, it will AI isn't magic. It still relies on the good quality of data, doesn't it?
And
And
I
Klarna have
had
said
a
that. I think actually in the last couple of weeks, the CEO of Klarna particularly commented that they had to spend a bit of time going back to basics, getting those foundational things right, because you can't just point an AI at this big mess of technology and expect it to make it less messy.
Absolutely. I mean, this brings me to a discussion that I had this morning with my colleague from the company from Filter 39. We were discussing AI about some new features in payments, and basically we went into basics to discuss about the LLMs and what they actually do. So if you peel off all the fancy wording and everything around them, they're the approximation because they are guessing the most probable, the most, let's say, the most accurate, that they think should be the most probably accurate answer for the question. So they are not, it's not like, database ask you for this specific information. You go into the index, you go to the database and you pull out this information. No, he takes, like, you ask him, okay, what will be the best dressing choice for tomorrow, and he will take this vast amount of data, 60% for this, and I will give you this 60%. I mean, this is how the hallucination comes, because, if they don't know the answer, they will go with the least probable, the best probable answer, which can be like 10% out of every answer. It can be completely false. This is the danger that lies within, and I agree. I mean, with this old data, if it doesn't have enough quality data that he can make the highest level of accuracy in providing answers from those data, then we will get a mess. And like you said, in financial world overall, giving any kind of advice by guessing, well, what could possibly go wrong?
Yeah.
Yeah. I
Yeah.
think before all this hype, before ChatGPT, there have been projects in this. When I was running the banking company, we did an experimental project with one local AI, at that time AI machine/machine learning company, where they would took the data from the core system and they would, chew on it, and then they would provide a bank with a list of customers that are most likely to purchase a product from the bank, whether a loan or a credit card or something like that. And they had great success because they worked on this huge pile of data from core, from transactions and geolocations, types of, I don't know, if they're buying something with the card, from type of merchants, etc. They could predict very well from all the data, including the harvesting PSD2 advantages. We're talking about Europe, of course. And they managed to raise the success rate of conversion rate. The call center from the bank would call, I don't know, 100 people, and they would sell, I don't know, 4 products. And when they took that decision-making part and saying, okay, call these 100 people, not just random 100 people, they increased, it went 4 or 5-fold, the conversion rate. And then the COVID came. This was like in 2019, 2020. And all of their models just, went to thin air because they couldn't predict anything anymore, because of the behavior patterns completely changed. And then I think this proves a really good case for this, like what you are saying, if the data is not good, because, they had a model, it was working, it was great, but you change the data, it doesn't fit the model anymore, and it doesn't know what to do with it. So for now,
It's
this is the
really
case
easy to
here.
mistake
Yeah.
the AI as genuinely intelligence because some of the things that it comes back with are astounding, and then it'll come
Yes.
up with something that is, you wonder, how did you come
But
up with that? It's a hallucination or something random. So I guess the point is, obviously AI will improve, but you need to be a little bit careful as an organization, especially a regulated one, handing the keys to the car over to this thing completely.
yeah, definitely there is something else rolling behind the hill. So I was hosting a panel a few months ago in a conference, Trends in Payments, and one of my guests was a lady who is running the, let's say, for one of the largest European payment processors. She's running a newly established AI department. So they decided to have like a completely new AI department, Gen AI, generative AI department, serving through the entire organization, all the business process, focusing on payments. And they're partnering with IBM. And she told us a story like 2 weeks before the conference. She went to New York for some, presentation of new things. And huge focus was on quantum computing. And she was genuinely scared about because she said this will change the whole cryptography world altogether. And she said it on stage. When my final question was, okay, if we need to give one trend that everybody should focus as a company in financials in the next year, where would you put your focus on? And she said, take a look at the quantum computing, developing protection mechanisms, new ways of encryption, because when they become mainstream, everything that we know, all the AS, all the advanced cryptography, it's like, unlocked in real time.
Yeah, all the
Not
doors
in
are open.
not in any amount. All the doors are open, and she thinks that we are not ready yet for that.
Yeah, that's a
So I
good point.
mean, yep,
Well, okay, so we've looked ahead. Now, I suppose looking at a slightly less
so
revolutionary technology, you spent a lot of time leading ABC as an organization, and ABC very much focused on digital banking and digital experience. So, as a category of technology, what are your thoughts about out of the box digital banking solutions in 2025? Are they still relevant?
well, there are cases, but if you take I mean, there are still cases where out-of-the-box solution is applicable. You know, for smaller banks, smaller players, or somebody trying to establish some kind of wallet solution and don't want to spend a lot of time and money building a whole customer digital experience layer. So that is, let's say, attractive for them. But if you compare it to, like, 4 or 5 years ago, when it was normal for a bank to just, purchase off the shelf a customer engagement channel because it was simple and we need to have it, let's do it. Situation today is different. I
Mhm.
mean, only everyone who can afford it, if it has a more significant customer base, is looking into personalization because they need to make a difference on the market. And this is the main touch point for years now. We cannot say anymore. I'm talking about the developing markets like EU, like US. It's not like it's becoming a very important customer touchpoint. I mean, this is the customer touchpoint, especially mobile banking when we talk about that part. So, and any mobile app, the answer would be the relevance of off-the-shelf customer engagement applications and solutions is much, much more reduced today compared to a few years ago. The emphasis today on the customer journey, customer experience, and the solutions who can provide customized customer journey for the financial institution, whether banks or anybody in that world.
So you would, if I gave you 10 million euros now to kind of get the MVP of a bank to market, you'd be using it to predominantly, you'd use built components, but generally you'd be going to own that technology stack. That would be how you would go.
No, no, we need to make a difference. You ask whether the off-the-shelf all done, or because you have a lot of solutions that are working exactly in that way, that are providing you with a platform where you can customize and create bespoke customer solution. I would build. I would go for such a solution. I would go for, on the digital side, on the touchpoint side, I would go for platforms that enable me to build my own customer journey altogether, and same on the other side, on the back end and on the core banking, because these players are becoming more and more relevant. So
It's always been quite a difficult area of technology because it's very simple to put it in to try and put digital banking in a box, as in it's binary. You buy a product or you build it yourself, but actually there's a lot of space in between
yeah.
where you're using the IP that another organization has created, but you're using it to build faster than you otherwise would if you were doing it from
Yeah,
scratch.
yeah. I mean, the time is of the essence here. So it's a jungle out there, to be honest. And you cannot afford to build something from scratch and build 3 4 years, because by the time that you come out with some product, trends have been changed 2 times, and what you were building is not relevant anymore. And I mean, banks are bankers, so they are slow even today. They're good. They're becoming more and more. They're becoming better. They learn from the so-called challengers. And some markets, the traditional banks are having better digital experience than the challengers itself. And I mean, it took them some time, but they have money, they know the business, and they're getting up there. Even some organizations, some banks, even here in the region, they went with spin-offs. They said, okay, inside the organization, we know we cannot be that nimble, that fast, that agile. Let's create a completely different, like almost a new company that will have a life of its own and have the purpose of building this digital experience for the customers, because otherwise it has so many restrictions inside the organization, from regulations to everything else. And we can feed them with money, with know-how, with everything there. But like you said, it's not just you have one solution, other solution, and there is a magical wiring, you plug in cable on both sides and it works. It doesn't, especially with banks having legacy systems and systems that are 20, 30 years old. I mean, I had a project with one bank that had 13 different core systems as a product of, buying one bank, bought another one, then the other one bought that bank, and they introduced something else. And it blows out of proportions, and nobody's touching it because, they don't know if they turn it off, can they turn it on? And it's a real life situation. But then again, they're trying to build some business layers on top of it who can, serve the digital touch points and then use the data.
Hollowing it out.
Yeah, but also not a simple task. And overall banking is complex. So as I said at the beginning, I had a privilege. I'm in the industry of payment and banking for 20 years, and I've seen it all. So I've been right now in card present and card not present world. I've been to on field acquiring stuff, issuing e-commerce, 3D secure, so the whole realm, and then I went to the banking. And then I realized the banking world doesn't know that much about payments and vice versa. I mean, even in payments, you don't know that much about banking. You just see it as they have the money on the account. We ask for the money and they transfer it from one card to another, and that's it. The complexity of actual banking is huge. Business perspective, from the technology perspective, from the regulatory perspective. This is perhaps the most important one. And it's also dynamic world. People think it's like boring, banking, nothing happens. The amount, and one needs to understand that innovation, why it's hard to have innovation in traditional banks, why it was hard. They had to adapt in the last 10 years, having new departments, new people, new way of thinking. Because, the challengers, they came with the idea just to innovate something and they were focused only on that and building only on top of that. The traditional bank had the regulatory framework. During the course of year, you have 10, 20, 50, 100, depending on the size of the bank, 1,000 different demands for some features, functionalities, and changes that are there only to serve the regulatory framework. And then on top of that, you still need to focus on the innovation, where on the regulatory part, you have hard deadlines. You miss them, you pay the fine. Or in extreme cases, you cannot work anymore on the
Yeah,
market.
and we've seen
So
that with businesses like Solaris and then the number ones where
uh,
the regulator has stepped in and said, no, you're
yeah,
not onboarding any more clients
yeah,
until you
yeah,
resolve this issue.
yeah, yeah, yeah,
And you highlight, I mean, a key part of these conversations is usually growing fintechs, and a key part of that is sales and marketing. And I think that's something that is very poorly understood within the industry. That if you're selling to a bank, there's 101 things that they'd love to be able to do, but with all of those regulatory things that you've just described, 90% of the things that they can do are taken up by things that they must do, and it leaves very
yeah.
little bandwidth left to do things that are customer experience based, or anything that's not perceived as utterly critical often just gets pushed into the next year and again and again and again.
Yeah, I mean, you can imagine the sales cycles with the banks are, and you are in the sales and with the banks, and are painstakingly long. Even, for somebody, they wouldn't say it's a sales cycle, they would say it's a dead deal. I mean, if you are trying to do something for 2 years, but 2 years is nothing unusual, even worse in some larger organizations. And like you said, regulatory comes first. And if something comes out of the blue, for example, regulator decides to implement something that they wanted to do in 2 years, but they want to do it now, everything that you planned goes away because they're becoming focused only on that part. We've seen that situation. For example, I'm in Croatia, my homeland where I'm stationed, and we had a transition to euro currency 2 years ago, and it came, let's say, 1 year or 2 years earlier than it was expected. And that meant that everything that has been started, every project, every innovation, besides the very necessary, had to stop and they had to prepare for this gigantic milestone. And all your CRMs and all your pipelines and everything that you prepare doesn't matter at that moment because they have to have to do it that way. And like you said, the resourcing is also a huge problem in that part. So if they don't have enough resources, you have a great solution. It will help them grow revenue, get new customers. But on the other side of the fence, we can lock up the bank if we don't do it. So leverage is much more stronger than that. Yeah.
I was talking to another CEO earlier this week, and they did a solution which was around carbon footprinting that goes into the digital banking experience. And it was really
Yeah.
difficult because as as much as I support ESG initiatives, you can just see that is the kind of thing that is always going to tumble back. When is that ever going to become a top priority for a bank to put in carbon footprinting over well, we've actually got to do these 5 things, otherwise the regulator's going to come and shut us down.
Yes. Yeah. That's, I mean, fantastic example. Yeah, by all means.
Yeah. So, Goran, we've talked a lot about the fintech domain. I'd really like to talk a little bit about the cultural experience of growing fintechs because that's a very important thing. Now, you came to take the reins at ABC in January 2020, which, as much as I try and forget it, was just before we went into a global pandemic.
Yeah.
If you're happy to relive the trauma, can you tell us about that experience?
Trauma is a really good word. So you can imagine, me all full of hopes, taking over the entire. I was country manager at that time, doing a lot of things overall in the group, and led naturally to me, taking over, like you said, the reins. I mean, I've been managing departments and building things from scratch many years before that, and you can imagine, just starting to creating strategies and preparing everything, and then March came, the end of February and March, and it was like I, I remember sitting with my wife, and then she was like, "What's going to happen?" I said, I don't know what's going to happen tomorrow, to be honest. I mean, it is the end of the world. And I said, like, oh God, couldn't be a worse time for for taking over the company. Yeah, it was rough. Let's say, I don't know if you remember the time. Really, a few months. It was like a dark ages overall. But then it started, at least in the any industry touching IT or digital. Then it became better. At that point, ABC was a company that had two verticals. One of them was banking as a result of a company that we acquired with core banking, and we built the digital banking part by ourselves. And the other vertical was the outsourcing company. I had around 130 people in the outsourcing department doing various projects, and that helped a lot. You remember the demand for all things digital at that point because it was the only touch point at that time. So that helped, let's say, overcome that few months of that period for the banking, and then we could focus on banking and grow it and continue further. Of course, we had challenges, with people remote working. Somebody gets COVID, then they're out for a few weeks. If few key people from the team get COVID, then it becomes again an issue. But if we can call it like the silver lining or the positive in that. I mean, if you can call it positive, is that everybody was in the same situation at that time. So you had understanding from the clients and everything, but it did slow down a lot of projects. It was stressful. It was depressing at certain points. I mean, some people I didn't see. You don't see people from a team for weeks. Some of them for months. Especially we were in multiple countries set up. So I mean, almost for a year I couldn't travel anywhere until they opened up that part, depending on the country. But look, we managed. We sold the outsourcing part, carved out, led the transformation to a full product company at the end of the day. So I grew revenue 6 times in those 4 years on the banking part from the initial. So yeah, we managed. But yeah, not
A
not the
rough
best time
ride, but
to
you got through.
not the best time to take over any new responsibility, to be honest. I would do it again.
I know it's a hot button topic, but actually it's something that I was thinking about this morning. Where do you stand on remote working? I know it's a very sensitive subject for many.
Well, to be honest, I'm one of those who say that this post-COVID changed things forever, and we need to understand that. So it will never be the same, like 400% in the office. Full remote working, look, even in this organization, it's a smaller team and we have people who are working fully remote in other cities. Some of them we gather once a month or more often if needed, and we have a very good. I mean, depends on people. And for a small organization, it's feasible. Having a full remote work in a large organization, I mean, that leads to issues. And I mean, this period that we mentioned earlier, as I told you, 100 and something people, remote work was mandatory. That it was not a matter of choice, had an impact in many ways. Because if you are remotely working constantly, if your team members are not together, it becomes harder to exchange experience. Mentorship is much harder. And that, I mean, let's be honest, when you are managing people, you know that the bond between people very often is a huge factor in for some people to remain, regardless of leadership, paycheck or whatever. If they don't have friends at work or somebody they enjoy spending time with, they will leave. If one of their friends leave for some reason, they will follow, because that's the main advantage that they have for them on the work. With remote working, that all disappears. Every man for itself. So I'm pro hybrid work, a mix of office and remote work. Fully remote work, I don't think it's completely efficient, especially in the large organization. It can. I cannot say it doesn't. It can work.
It's very difficult though.
It's very difficult. Yeah.
So, looking back at your time as a CL, I've always found that it's our scar tissue that defines us as much as our successes. Pain's often a very effective teacher. What's one of the biggest mistakes that you've made on your journey that's been a good teacher?
Oh, if I can emphasize, let's say two of them. There was a project that I've been working in the sales cycle for almost 2.5 years. In the hindsight of this, and when we signed it, it was very tight in the terms of timeline for the implementation, because it had a hard stop. And as the sales cycle went further, that period for implementation reduced. At that time, I was happy to sign it and to accept it, and was confident that we were going to make it and implement it. It it led to many sleepless nights and many issues in hindsight. From what I know today on such type of project, there is a friction in the sales at the end. I would say no, because that left a huge impact on me in that period. Sometimes you need to say no, even if regardless of word, but you need to take a step back and say no. And the second one, I mean, of course, throughout the course of the daily operations, there are many scars that are left in you. There are also good things. But for example, when taking over, when we acquired one company, some people, when you acquire a company, when you need to merge it with another company, you need to curate very well. You need to decide which people are staying, which are leaving. And let's say the selection that I did taught me a few basic principles for some future endeavors in terms of selecting, because very often the people who are, let's say, like the strongest stars in the team don't do very well in these kind of transitions and scaling and growing, because they have established themselves. They see themselves as somebody who will sit there for the next 10, 15 years until the pension, and they don't react very well for the new initiative, transformation of the company, growing. And you keep them because they're always pointed out as a most experienced member in the team or whatever. And I saw this in my personal case and a few other cases from other colleagues where just that was a rule that was confirmed for me. You need to make painful decisions sometimes that on the short run could look like they're not good, but in a strategical way of thinking, you need to go further. And that's perhaps the summary of it. Strategic decisions are not always the positive ones. Those are the ones that leave the most scar tissue, like you
Yeah.
said, because they don't. Sometimes they don't seem like a smart thing to do, or they're not easy thing to do, but you need to do them because in the long run they will bring success.
I mean, that second, they both resonate, but that second one really, really hits home because I think what you're describing is some quite kind of vocal. They're quite rigid or stuck in the ways of working. And in some ways, that makes them good because they are, like oak. They're dependable, but quite unflexible. And what you're
Yeah, they,
describing
they
is
want to keep
when
doing
that
the
change
things
comes.
their way. Yeah, yeah,
Yeah,
yeah, yeah. Yeah, and you don't want to lose them because look, they are, like you said, they're the oak of the company, and they don't fit. And this is the decision that at that time perhaps I would lose one or two guys closest to that person, but then it would make up through the course of time on many other things. But
yeah.
like I said, strategic decisions when you are on top of the company, the strategic decisions are the most painful ones.
Yeah, very, very much. I was reading a book actually on this subject, which is called The Advantage. I can't remember the
Hmm?
author, but it's a very good one. And it's about organizational health. And one of the things that they discuss is being able to vocally disagree and then still commit to a course of action, which is it's all right. When you bring people to the forum, it's okay for people to raise concerns. But at the point at which the decision is made by the CEO, people need to then commit to the course of action, even if it wasn't the one that they would themselves have chosen, because the alternative is like a kind of a mule. They dig their heels in and become obstructive to the change that the business needs to make, and well, not almost, actually, a toxic force within the business.
Yeah, 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 yeah. That's it. That's it. And it's not easy to. I mean, I recognize this to every manager. I mean, today it's not easy to recognize this or to make this decision. Like, yeah, well, yeah, he will help me anyway, but it will not. He will not, or she, doesn't matter, because like you said, they're the mule. They will, hold their ground and create a toxic environment overall. I mean, there's another book that I always refer to. To be honest, I forgot the author also. It's perhaps 8, 9 years since I read it. It's called 1 Minute Manager, which really stuck in my head. You know the book, right?
I do, yeah. A
Uh,
great read. You can read it over lunch and it's just straight to the
it's
point.
it's it's so mind blowing, and what it brings, and I try to incorporate it in all my business decisions, even in my my life, because it really, especially in the work environment, it really sets a fantastic role. Like, the 1 minute, the decisions and things like that. And then somebody comes with a problem. You will help him find the solution, but he needs to tell you what does he want. If he comes, I think the example was like printing machine, thing is coming out blue. And we have a problem, is coming out blue. And then you are not, trying to solve why is it coming out blue. No, you need to ask which color should it be at the end. Because if you cannot tell me what do you want as the outcome, then you are not giving me a problem that needs a solution. You're just complaining without any end result. But if you come to me and say, look, it's coming out blue, it needs to come out red. Okay, then we're going to work on a solution. And you see it every day. People, when you're leading, when you're managing, people are coming to you saying, "Oh, James is doing this and that." Okay, but what's the issue? What do you want for James to do? Do you want him to help you on that project, or well, no, but he's just doing this. I don't want to hear. That's how I try to approach these things. If it's just complaining,
And
don't
it's
do
an
it. Yeah,
interesting subject because it separates out the competence of the individual with the dysfunction of the entire business. So one person can be amazing at their job, but if they're not very good at working within the system,
yeah,
particularly in
yeah, it
larger
doesn't.
businesses.
Yeah, yeah, yeah. It can be a huge problem. Yeah. And then, you need to combine all this with those rules of, 20 people are doing the job of 80% people, 20% is doing the job of 80%. And then, I mean, but you need, I always, and especially during the course of outsourcing teams, the service one, that taught me that, when you have a team, you cannot have, 10 of super rock stars. I mean, like in football. I mean, there has to be somebody who is a star, then somebody needs to play the defense, somebody needs to be a midfielder, and it goes to life and it goes to business. I mean, the same here. Some of them, they're not creative. They will just, you give them paper and they will type in whatever it's needed. But you need those guys also on the team,
Mm.
and you need that guy who will always look for a solution, whatever you try to give him. And, in combination, like you said, it's not called teamwork for nothing.
Yeah. Goran, I have one more question,
Yeah,
which is a sales and marketing one, because that's my specialism. So my question is this: how buyers, particularly in banks, purchase has changed a lot. So if you were going into a technology vendor tomorrow, Series A or Series B, and you had to set up their sales and marketing, how would you index the spend for sales versus marketing? And I'll just a little bit of context behind the question. I've seen so many businesses that just hire a load of salespeople, and I'm always fascinated with how different individuals that have held executive positions see where they should deploy that capital.
I have a very let's say specific approach to this. So the company I joined a year ago, Field 39. We are doing very niche, let's say, payment. I don't know if you managed to see things that I'm in charge for business development also here. And we are not a big company, but we have a fantastic product and service, which is aimed at the largest enterprises. So it's a bit like um, it's the opposite. Your clients are huge and you are not like a Gartner company. And the same principle I had when I was in banking, when we were a small company pitching to banks, tier one, tier two, doesn't matter. So this is like the data that we discussed at the beginning. If you have bad data, garbage in, garbage out. Very, very simple. And if you put 100 salespeople to a product that nobody knows of, that is not ready or not prepared or doesn't have all the fundamentals, well, you will get nothing. You will get a lot of failed leads and opportunities altogether. So I would rather focus on, raising brand awareness. So I would more put it on marketing and partnerships because this is my main philosophy. I go for partnership. I go for com, compliant players on the market where we can work together, where we overlap in the market. And then, okay, you are selling something to the same clients that I want to sell, but your product is not the same as mine. Can we work together? Your reach is higher, for example, than mine is, and vice versa. And I think this is the approach that needs to be followed. If you're talking about B2B, I mean,
Yes.
we are talking B2B. And B2C is a clear game. You need to burn millions in marketing, so to reach to people and then try to sell to them. Here, you need sales, of course, but it will be more on this. I mean, we call it marketing, this partnering conferences, things like that. I'm not talking about commercials, etc. But you need to reach to, people need to recognize you before you can do some large things.
And that's the thing. Even if you have an outbound sales force calling someone, if they've never heard of your business before, the chances that that will either be a productive call if you get connected, or that they'll even take the call by virtue of your brand is so much less.
They don't know you, so you need to create content and like I said, the partnerships are marketing for me because when you connect to a larger name, to a more local name, then they recognize you and you get credibility, and then you can sit at the table and talk with them.
Goran, we're out of time. Thank you very much for joining me.
Thank you for having me, James. It was a pleasure.